Hi everyone, I hope you can hear me okay. So I'm going to go over a little bit about what sort of market we're seeing at the moment and how you can day trade this. And this morning I did a live trade in a webinar. There's about 7 or 80 people along for round the clock traders, which is really good. And this is what I traded with them. This is the DAX 5-minute chart. And what you're seeing here is the core of our day trading system, the main sort of center of it. And so what we're doing here is let me just get the pen. Sorry, I'm just checking a few things, that's why I'm hesitating. So we came in to the trading room, came into the webinar with this. That pink line there is the close of the market on the previous day. So the DAX closed at 4:30 on the 16th of July at 12,427, and that is what you're seeing with the pink line. So when we came to open today, what I'd like to do is I'd like to range off the first 5-minute bar. So this is the first 5-minute bar. Now it doesn't matter what color it is. I'm not interested in whether it's bullish or bearish, whether it closed higher or lower, and so on. All I'm interested in, so let me take a sip of drink. All I'm interested in is what happens in relation to the anchor system we've got and elements like the gap. And the gap is important because that is making a statement, the market's making a statement as to the level that it feels is fair value at the cash close. So into this morning we had this situation here, and this is what I did in the room. So we actually, after this bar was formed, we had a lower close, and the third bar actually broke this range. So that's the high, that's the low. So we broke the range at 413, 414. So that was my trigger. So what I did was when the market pulled back, I can't remember what time now, I think it was about 8:35, the market pulled back to the cash close and I shorted for 25 pips. I think it ran about 26 pips. So let me just recap on that. So again, it doesn't matter what type of bar you've got, bullish or bearish, higher close, lower close, doesn't matter. What matters is what the market does in that 15-minute period. So direction, pull back to the cash close, 25 pips, get out of the trade, particularly on a day where, in a period in the year when the markets are showing a lot lower volume. So as it happens, it's later in the day. I mean, we're talking about hours. This is 10 o'clock, 10:30. It ran up into 11 o'clock, and then came back into the same sell signal at about 2 o'clock. So it did a complete repeat at 2 o'clock of what it did at 8:35. And then guess what? It triggered short, it pulled back, and then really gave away. So this was a very nice sort of distribution pattern. And this high in the doldrums was used to shake out weak hands. But this move here was pretty much a carbon copy of that move there, only this time it really gave way. Once we got to this level here, 3 o'clock, it just gave way. So the trend trade on this one, the trend trade for me was always short. And somebody asked me in the room, why didn't I go long? And my immediate response was because I didn't get a buy signal. Not quite sure where that question came from. I should have spent time asking that person why they thought this was worth buying. As it happens, if you had bought the low and gone long as it came into the range, you would have got 35 pips if you waited something like 3 hours. So that shows you how low the volume is. But the trade was, this is 2:30. Well, this is 2 o'clock and this is 2:30 when the US is opening. So once the US opened, this market really showed its hand, and this direction created this lovely move to the downside. So that's how to trade. In my system, that's how to trade the trend of the day, of the session and the day. So to me, buying here was counter trend trading. Now, why do I say that's the trend? Well, it's the trend of the session, which is what we're aiming at. But if you look at this area here, this is a weekly chart of the DAX. Let me just put it to the middle. This is what I was working on over the weekend. And you can see that on this particular chart, we were under, this was last week's bar here, that one there. And all we were doing is pulling back into my zone and coming back, testing the support, and we are potentially potentially going to give way and see a retracement into 12,000 potentially if this plays out. So it's a new high in the range. It's an immediate lower close next week. So that's a sell signal for me. That's a clear weekly sell signal. So what you've got to do now is be patient and see if this can eventually break this 340. So we break this and stay under here into back end of this week into next, then this area here is where we should see that retracing to. Now we are trying to hold here at 340. But once you get a signal out like that, it's worth selling the highs. The highs have been selling for all of this period. If you look left on the chart, which is what, as traders, that's where we need to look. If I look at this area here, if I zone this resistance, I can see sell signals in the weekly chart right back here. New high in the range, lower close, generates 2 weeks of selling, 2.5 weeks of buying, and then the sell. This area here is interesting. Back in, I think this is September, we had 2-3 weeks of selling, 2.5 weeks of buying, and then we did a decent drop from here. So it's reasonable to assume that we could see some follow through here. Okay, so from the drill down to the big picture to the actual intraday move, that's what's going on in my head. This is what I did at the weekend. This is what I was focused on. If you look at the daily, we are right underneath this structure. And whenever you get a structural breakdown, we had a structural breakdown here. I mean, what is a structural breakdown? A structural breakdown is where you have a pocket of price action sitting in a zone like this, where you've already had significant selling, all the highs, you've got lower highs and lower lows here, lower lows, lower lows, lower lows. lower highs, lower highs, lower highs. So this is a real junction in that chart. So a real junction. If we come out of that, then the chances of that dropping quite hard are very high. Basically, the market's capitulating; it's giving up. You know, there's no buyers there, only sellers. The highs are selling, so the market is forced to drop it down. One other thing that those of you who know me well will know that I like to look at is Elliott wave. So if you've got a situation where, let's do a count from here. So this is May 18, sell in May and go away. There's the initial sell. There's the pullback in late June, early July last year. And that's what we saw in the late June, early July last year. And I don't know if any of you were in the room today, but I said the volume tends to come back in about the third week of August. So we pull back into July, we drop into early August, pull back, and then about the third week in August, this gives way. Pull back into October, gives way. So we got 1, 2, 3, 4, 5, 1, 2, 3. So not only is this completion of a C wave after a 5 and 3 wave sell, you know, it's a key junction. Anybody who knows pinball Elliott wave will know exactly what's going on here. So there we get the sell, there's the pullback, and so on. So you know, if you look at let's look at a 2-hour chart from last week. You can see how these highs are selling in a 2-hour chart. So if here's 321 on the 50% of this last move. So if we start breaking that, we've got another lower close in the 4-hour chart. So start breaking this low here at 335, and this could continue lower now. Okay, so on a 5-minute chart, let's have a look at what happened on the day before. So if I take this off a second, let's find the Monday close at 4:30. Where are we? Right, looks like the Monday close was down here. The Tuesday open was here. So that was the range for Tuesday. So this particular day, this is a reverse, excuse me one second. This is a reverse of what happened today. We had the cash close underneath the price action. So we pushed up, we triggered long. We then looked as if we were going to buy here. Actually, I was buying here and I got stopped out. So we went back to the ceiling of the range, dropped once more, pulled back in the range, dropped again, but eventually this pushed up. But as soon this is a repeat of yesterday. Later in the day, the high just sold again, and we just started to wind our way down. So these highs are just selling, and this market is not for buying as we right now. So whoever asked the question in the room, why didn't I buy the low, that's a lengthy answer as to why I didn't buy the low. Right, if I now put this gap back to where today's close, so this market is now closed, and we closed right there. So at the moment the market is trying to cling on to that close. So let's see what that's going to give us tomorrow. Let's take a look at the Dow. And this is what we are seeing in the Dow. So this is the cash close on this market. And at what time? This was about 3 o'clock, 3:05. We saw this sell. So we had a move to the downside, moved back above the range, closed underneath that range, and then we got a 1, 2, 3, 4, 5 little wave to the downside. And even now, this resistance is still selling. This is where some people make a mistake. They see a lot of uptick in the charts. They see the charts moving up. This is a classic mistake. I think, all right, I'll buy here. Oh yeah, I've got to move. That's great. It's dipped. I'll buy here. Oh, I've got to move. That's great. And all the time, really, you're counter trend trading, because we've got from this area, even today, on a smaller time frame, we've got a lower high, lower high, lower high, lower high. So these highs are selling. The big money is getting in here. Anybody who's buying this is just counter trend trading. Once you break down and once the market shows you its hand, then I would strongly advise you follow it. And if it's selling, then sell the highs. If it's buying, buy the dips. So this is US doldrums now. So we have 2 hours 40 left in the session, and at the moment this is just selling. And if we can't hold this area here, then we are potentially going to come all the way back down to that low again. So this is shortable now in my book. As we're breaking support as we speak. So it's possible that could wind its way down. The only downside against this, what is potentially an upside, is the fact that this is doldrums. So once you've got the move, it's a good idea not to stay away and just let the market do its own thing. I tell you what I would do if we find ourselves, if we get a little bounce into the close and a sell signal into the last hour, I would look to sell that. If we push into 310 again, I would into the close, into the maybe about 8:30, even 8:40. I would consider selling that to see if we can get down to the low again. Okay, so in Scalper School, this is what we are doing. This is just one part of Scalper School. The other parts, as I talked about, we have our gap strategy includes 3 setups. Actually it's 4. It's a potential gap, a gap fill. It's 50% gap fill. And then we have 2 other gaps. We have the cash close, and then a final one, which I'm not going to talk about because that's one of the most important of the week. So that's gaps. We have then of course the open range, the OTR, the open trading range. We have a reload system on this one. So it's an open range plus a reload, which is where we would like to try and hold into the close. And Then of course we have the data set up. Today we've had invents. Let's have a look at oil. Last I looked at oil, it was falling quite hard. Yeah. So here's oil. This bar here is the 335 bar. The bar that closed at 335 is a 5-minute chart, which was that's the invents. So that's the reaction to the inventories. The next bar is a sell. This is the cash close. And so we're dipping into support, pulling up, and just selling, just not finding buyers. So this is just rolling over. So again, once you get this sell in oil, that's the direction from the inventories, and all these pullbacks are just selling. And we still look as if we could still look as if we could sell down here. Normally you get a push up, a pullback, and then return to the trend. So this is unusual. This is sort of broken the main rule really. This is just sold it's pushed into resistance here on the invents, and then just sold, just capitulated. So even into the open, we had this sell move into the open. So this push up in the invents has just moved into resistance, and that's what trading's all about, isn't it? Support and resistance. So that's a quick look at what we are doing at the moment. Like I said, the most important element of Scalper School is the reload. The reload is really, really crucial to us. That's where the profits tend to come from, and that's the most popular. The reload is the most popular trade. Some people, when they come into the Scalper School program, you get a full 4 weeks in the room, and sometimes I get about 20% of the people don't actually come into the room because they take the system and they use it. I have one particular guy that came back for a retake, because retakes are free, and he only took one setup. So we've got a number of setups to do with gaps and the open range and data, etc. He just liked one particular setup, and that's what he focused on, and he did extremely well on the back of that. Let's take a look at one other market I keep an eye on is soybeans, only because I used to trade them, day trade them extensively. The characteristics of soybeans has changed enormously now. So you can see this was the previous. Where are we? The main open is 2 o'clock. So where's 2 o'clock? Oh, I see. Okay, they open at 2:30. Okay, that's the first bar, 2:30. That's weird. I thought I don't. You see, I haven't traded them for so long. Well, not at the open anyway. When this is opening, I'm just focused on the Dow. So that's the initial bar. Look how there's the center of the range. I'm just eyeballing it, and look how you get the move, pull back into the center of the range, and then this is potentially not going to hold. This could potentially fail and creep lower here, which suits me because there's a price down there at the lows that I would like to buy. So I'm watching this on a bigger time scale. There you go. So I would like to see that dip into $8.90. I would need this to hold at $8.90 because we could come all the way back down and retest this 850, 860. So I will just keep an eye on that. Any questions at this stage? Any questions? So the next program is on Saturday. If you go to this area here, so scalperschool.co.uk, if you are, like I said, keep an eye on this follow us area, because I do post more regularly there now. And you can see some of my blog entries there. But if you go to the program, this is what's included in the program on Saturday from 9:30 till about 1:30. 4-hour program. The modules are split down into, there's 3 entries for the open range. You've only seen one from me today in the session this morning, and I've talked about that same one just now. The golden anchor, the gap strategies, of which there are four parts of the gap strategy. The chart system setup and how the anchor chart works, and that is the most crucial part of Scalper School, which I've not revealed at this stage. And then we do simulated trading. We do at least 3 or 4 simulated trades, and then we talk about the breakout strategy and the reloading for the breakout strategy and the rules, and then that gives you access to the room for a month. So that's 12 sessions included in the price, and then if you want to continue at a modest cost of £95 just to cover my overheads and the input. There is of course a Monday night session, a scan session, a Q&A session, and there is a Telegram alert room. So the app works on desktops and mobiles. I use Telegram because it's very secure. It's much more secure. So if you can't make the 20th, there's one option is you could just watch the recording. Otherwise, it's then the 10th of August is the next one. If you're interested, here's the buy button. Then just go to this buy button, and you can see how to get in on the program. The number of people on the program is limited because we keep the numbers nice and small. So there's plenty of opportunity for people to ask a lot of questions, and so that's really useful. Okay, now for those of you who just joined us a little late, I'll send you a recording of it. But essentially we've just been looking at, been showing you how I drill down to the bigger picture, and then bear with me one moment. I drill down to the bigger picture and then use that to help me trade during the day. In my day trades. Okay, you're all very quiet. Nobody's asked a question. Oh yeah, there is a question. I've missed it, sorry. What do I think about buying forward? Okay, I'll look at that in a moment. Let's go back. Let's just see how the Dow's behaving after I talked about this 5-minute chart. So you can see based on that how the highs are selling. They continue to sell, and so what I would, like I said, what I would do is look at this into the close, and then see if these kinds of areas. This is something you might want to look at tonight. If we come back into this area, at some stage into the last hour and put a sell signal in, then I would definitely look to short that. In the meantime, it appear to be it's trying to push up very unsuccessfully at the moment. Okay, so I will. What else can I look at? There's nothing else for me to look at the moment. So, having shown you the hub of, I'll go back to. I'll clean this chart up so you can just see exactly what's happened to the DAX Dow today. Take all this mess off. So if you traded with nothing but the cash flows on there, you would have potentially got a move from 335 to 235, 100 pip move. And there have been other opportunities to engage that market on these little highs up here. So 315 has sold down to 272. And we're certainly struggling up here. These little highs are just always potentially opportunities to get short in, but like I said, once it's in doldrums, I would just leave it alone. Particularly if you've got a 100 pip move, keep your money and leave it and walk away. If for any reason you've missed it, then don't worry, just leave it. Don't chase the markets. That's really key, and don't counter trend trade. This is the direction that the market wants today. If you are in the habit of trying to pick bottoms and you get stopped out, then stop doing it. Do not pick bottoms. We have a specific reversal strategy in Scalper School, and I haven't used it for a while. Sometimes you get a few reversal setups. Sometimes you don't get anything at all, but otherwise just leave it alone. Right, let's have a quick, any questions, final answer for, request for questions as I move across to answer a different type of question. Let's have a look at Ford right now. You can day trade stocks, of course. It's a different strategy, but nonetheless very successful one. But I've come across somebody who day trades sort of penny stocks, and he does if you believe his blog, which certainly looks if it's credible, certainly looks as if that is successful. But anyway, my main point is that is another completely different area to get into. I would look to short this. If Ford closes under 10 anytime soon, I would look to close this up to short it. Why? Because we've had a lot of selling. The pullbacks have sold. This to me is a potentially good pullback area. But I would need to see this closing under 10 sometime this week, or whenever it closes under 10, if it closes under 10. Really, it's got to close right underneath that level there. If it's a breakout setup, if we close above 10.5, then yeah, that could be a buy signal. This dip here was interesting because we had a big push. This could apply to indices anyway, so it's worth talking about this. This is basically my sort of style of technical analysis. So a big push up, big pullback. So if I take all this off for a second, let's look at this big bar here. We had a big move here. So this day here on 25th of April, we pushed up into resistance, we pulled back, we just breached the low of it there on the 31st of May. So if you're going to trade forward, buying that dip, having had this one push was a good move. But here it could go either way. Close above 10.5 and 11, this could start moving higher. Close under this area here, and it could drop hard. So where that chart is at the moment, I wouldn't trade it. Do I trade patterns? Yes. I trade Elliott wave patterns mainly. Well, you saw, if you look at my daily DAX, you've seen how I've drawn up this daily DAX. So Elliott wave, I'm a big fan of Elliott wave. So what I was looking at here on this one is there's potentially wave 1. We had a 1, 2, 3, 4, 5 wave up. This is a 1, 2 wave correction, and wave 3 could potentially be quite an impulsive wave. So if we are in the process of wave 3 and we can't hold here, either wave 2 is not finished and could come back into that, or wave 3 is potentially underway if we break this low. So at the moment we're fairly neutral. In the whole scope of things, we are, why do I say that? Because that's a 5-wave move. This is potentially a pullback. So you know, I can't decide at the moment. The market's not really showing me whether this is still a pullback into wave 2 or whether wave 2 is over and we could capitulate. I'll know if we start closing underneath this week's low. Listen, I'm a simple trader. Elliott wave and sort of these structural patterns are all I trade. I don't go into bear flags, bull flags, head and shoulders. That's not my style of trading. That's not how I assess the markets. But I'm looking for structural support and structural failure. Otherwise, I think to me, looking at a whole stream of chart patterns, to me, it just overcomplicates things. You know, you could end up drawing all sorts of things on your charts. So that's where we are with that one. Let's get an update on so the Dow is definitely trying to, this is a great chart pattern. Structural failure here on 1st of May. 1st of selling May, go away. We are, yeah, let's face it, we're at a time of the year when a lot of traders are on the beach. So the volume is coming out of this market. So it could be that this market could just give up. If it's bullish, if this market is bullish, so at the very least we're consolidating with a lot of resistance above. If this market is bullish, then it needs, for my money, it needs to come at least down to somewhere around here. And if it gets bought and then breaks this high, then we could come and see 28,000 and higher. But start closing down into 27,000 and this is done. And already I think there's a lot of volume selling at the highs. So if I repeat what I've done, what I've shown here in April 30th, if I repeat that, yeah, we are potentially already underneath that structure. Let me draw that a little more carefully. This is why we're at least seeing some selling. Like I said, if this is really bearish, very bullish, then we need that dip and then to start seeing some higher closes. Okay, well, that's something that you could look at as far as day trading is concerned, if you are interested in day trading. If you want to, one of the main things behind Scalper School is that you are trading in a room full of people trading the same setups. So, yeah, trading alone is hard work. You've got to make decisions, you've got to stick to the rules, and you have to be clear about what you're looking for in trading, in these markets, so that when the same setup comes along, you stick to the rules, you take the same setup, and then you should make your money, you should make your day's money. So that's one key advantage, apart from the fact you get a set of rules and key strategies to trade. The other aspect of being in part of Scalper School is the fact that you're in a trading room full of people who are trading the same thing. Okay, so if you want to join us on Saturday and you want to join us in subsequent sessions, then this is a good opportunity to get in. So, final call for questions. Market seems to be catching a beat at the moment. Okay, no call for questions. There's no questions coming in, so I will see some of you in the program on Saturday and come back next Wednesday. I do do a regular Wednesday update with what sort of setups we're seeing in the market and how the market's performing. So come back next Wednesday at 6 p.m. and join me again. Otherwise, if you want to get trading, you want to get in our Scalper School trading room, then book up. All right, thanks very much, and stay tuned with the website and the blog, and make sure that you put your data in there. I will be doing other events soon, some of which are free, some of which will be a modest cost, so watch out for those. Right, thank you very much for your time, guys, and I look forward to seeing you again. Bye.